3, 2, 1, and we're live. Waiting for the picture to come up. There we go. All right. How you doing, friends? Ernie here with the 0 Days to Expiration podcast. This is episode number 84. 84 episodes. Man, I've taken a little hiatus over the past week or so to kind of regroup, think about the future a little bit, think about what are the types of things that I'd like to get into, the things that have huge upside but maybe little effort. And that's what this episode is all about. It's all about asymmetric opportunities. How do you find them? Why do we seek out asymmetric opportunities? What is an asymmetric opportunity? Life really is all about these small little things that we do that could potentially turn into something really large. And a lot of times we just step into things and don't realize it. However, if you're the type of person that doesn't want to put yourself out there, then those type of opportunities are slower to come. You're really relying on something unusual happening. But if you're the type of person that likes to push yourself out there, take a little chance, invest a little of your time, if time is what you have, meet some people, talk to people, educate yourself, anything, any of these little things can turn into something bigger later on. You never know who you're going to meet tomorrow or the next day. But guaranteed, if you do not get out there and don't meet somebody, or don't do something, or don't improve a skill, or don't investigate this or that, your opportunities for an asymmetric outcome or a bigger outcome are limited. So what is asymmetry? It's pretty simple. Asymmetry is the difference between a small risk that you take versus a large potential outcome. It could also be the other way around too. You could take huge risks for small outcomes. I'm not sure exactly why you'd want to do that. That's kind of like the nihilist way or the defeatist way, the masochist way. Are you a masochist? Probably not. So in life, we're trying to do a couple of things. We're trying to go through life without collecting too many scars. We know that we have to put our work in, our time in, and right effort, right think, right action, all of that stuff. And by doing that, we hope that we gain in the future. Some of us hope, some of us don't care, some of us care very much. But you can attribute a lot of that to luck, but your luck really is a function of how much effort you put in up front. It's said that certain successful people, they just seem luckier than most. What you don't see is all the work that they put behind the scenes. This is very true for some of the top athletes out there, guys like Tom Brady, for instance. That guy is just a workhorse. The success that you see on the field is just a small portion of what goes on behind the scenes and what he did to prepare to put himself into that position of success. So it's really not much different in life, too. Life is really about a number of small bets that we make, and we're hoping that they're going to have some larger upside later on in life. So we're constantly seeking out asymmetric opportunities. We're certainly not sitting there trying to take risks all day and put ourselves through that sort of anguish with the hope that one of these risky things that we're taking on is going to turn out great. Maybe some of us are. Maybe some of us are these thrill seeker types thinking that that's the only way to success. Like gamblers, people that are getting into the gambling habit. They think that putting it all on the line, you need money to make money, etc., is the best way to success, and it really isn't. First of all, it extracts a toll on your psyche, on your physicality, on your mental health, your physical health, and that can't be good. It's certainly not going to help you once you attain something and to keep it, hold on to it, and then move from there to the next level. It's really important, I think, not only to educate yourself and put yourself in a position where you're going to make your luck, to also be in the right frame of mind. And that means that you need to have that mental health. You need to feel good about yourself. You need to feel positive. And you're certainly not going to be that type of person by exposing yourself to constant anxiety. And that's the way I look at most day traders. Most day traders feel like they need to risk something in order to gain something. And of course, it's all risk to reward, but they want to risk more to gain just a little bit. They think that by risking a lot, they can increase their odds, their probability of winning, but the wins are so small and the risk is so big. So they'll put on trades that are 10 to 1 or even 3 to 1 or even 1 to 1, where the outcome is not positive in the long term unless you get lucky. People who create real wealth are looking for ways that they don't have to put in that kind of risk. They put in tiny bets, small bets for huge potential outcomes. If they lose, it's not any big deal. You move on to the next thing. Make the next small bet. You can expound on that even more if you look at these small bets as things that you learn or teach, a new skill. Perhaps the most unbelievable asymmetric opportunity is simply the time that you put in for personal development. Going to school, reading a book, searching the internet, looking up a topic, getting into it for a little bit, becoming a pseudo instant expert by putting in the time and understanding a subject matter. Now, you don't know if that's going to pay off or not. Other types of ways that I said you got to put yourself out there. Other types of asymmetric opportunities are time in putting yourself out there and meeting people. Say going to a conference or to a club, meeting somebody, going on a lunch date. You don't know if that's going to be your future spouse or business partner. Going to a party, or what they call it the cocktail hour. Of course, that's for the big city folk. All of these things are small investments in your time and effort for unknown future potential huge gains. Being in the right place at the right time is not a function of chance as much as it is a function of you putting yourself out there. And it's the same way with trading. With trading, why would you put bets on that where the asymmetry is against you? If you did the math, and I'm going to talk about this in a future episode and tell you why when you put on these risky bets in order to make small profits, thinking that you have a high probability of profit, in the long run, the future outcome is actually negative. But when you make asymmetric bets, well, and on top of that, when you're doing that, you're constantly under this angst, this anxiety throughout the entire time of your trade. I don't see any positive that can come from it. Sure, you might eke out small incremental wins thinking that you're gaining an income, and then you have one big loser and bam. Why wouldn't you turn that all around and make tiny, tiny little bets? Very, very small, with huge potential upside. You probably don't even look for those type of bets because everyone's telling you that this is the type of risk reward that you have to take in order to gain success. When in fact, most people that are trading are not finding success with that strategy in particular. But the people who are finding success, the professionals, the pros, the very successful traders, they focus on asymmetry with small bets that can produce huge potential outcomes. Probably the best illustration of this is this movie that depicted the 2008 housing crisis and called The Big Short. And it illustrated a whole bunch of people that found these asymmetric bets that they could make. All they had to do is put themselves out there, be smart enough to recognize what they had to do, make a small bet for potentially huge payoffs. Now, what we do is we trade 0 days to expiration, the very last day of expiration. Most people that are trading the last day of expiration are going after the normal way of doing trading, the normal trading paradigm, trying to create an income. This whole idea of trying to create an income in a market that is not regular is really built on randomness and chaos. And trying to extract a random income is nonsensical. So we don't do that. We don't do the iron condor fashion of a 0 DTE. It simply is incongruent with what your objectives are, and that is to grow your wealth. First of all, you have to divorce yourself of this whole idea. Creating an income from a chaotic market is a non-starter. It's not going to work. You're basically beating your head against the wall. For some reason, that's what people like to do. They feel that, well, everybody else is doing it. I might as well do it. Doesn't work. The people who achieve true wealth take asymmetric bets, small little bets that do not hurt them. Keep them in the right frame of mind. When you're taking a small asymmetric bet, a small risk, that if you lose is of no consequence, you're not going through that anxiety. You're not putting your mental health, your physical health through that turmoil. And sure, you're not getting the same frequency of return, but when you do get a return, it's huge, and you can build on top of that. So that's exactly what we do in 0 DTE. We take asymmetric bets. You might wonder, well, how do you do this asymmetry? Don't you give up that regular income? And that is true, you do. But instead of having a very volatile or sort of very choppy equity curve like this, and then it might go up if we're lucky, it might go down. Usually it goes down because, as most people lose in trading. We have a very smooth equity curve with very few drawdowns. And if they are drawdowns, they're small and gradual. And then we get lifts when we get that, when you hit that asymmetry, that big payoff. And again, I'll talk about the numbers around this and why you can expect positive outcomes with asymmetry, with asymmetric bets, as opposed to going the other way with this sort of playing close to the vest, trying to choose high probability outcomes. The way we do it is we use a strategy, we use options, and we take advantage of the various edges that we know that we have in the market. For instance, the overstatement of volatility, which turns into premium, is a huge advantage for us. Probability of touch is another advantage for us, where most people are working on probability of profit. Probability of touch has a 2 times expected outcome over probability of profit. We're not looking to sit inside of a big wide tent that has very low ceilings. We're looking to end up into that huge high-rise building that has ceilings that you can barely see the top of. I don't know if that analogy is working for you. It works for me. So asymmetry. Everything about trading successfully over the long term to have a positive outcome is by taking small bets for a very large potential outcome. That way, if you also think about it, there's also a spectrum of possible things. It's not a binary choice. It's not, hey, I either lose small or win big. I either lose small or win big. It's not really that way. There are cases where you could win halfway, which is still way bigger than the prize that someone gets in the other type of strategy, where they're betting big to win small, because they never win big. They never win medium. But with asymmetry, yeah, you can win small, you can win medium, you can win extra medium, or you can win supersize. So right in that aspect alone, the positive outcome is way greater than the other way of doing things. So hopefully this sort of sinks in, and the power of asymmetry. all of the most successful people in the world have made their fortunes by taking small risks for potentially huge outcomes. Sure, there are those that have rolled the dice, so to speak, put it all on the line for creating something big, but that's not something that's repeatable. This is a repeatable, consistent winning strategy. Just requires a little patience and change your mindset from creating an income to building wealth. That's what it's all about. Thank you very much for hanging out here with me a little early in the day so we don't have too many people in the peanut gallery asking questions. Let's see, Dan Smith is saying Bill Hong had 20 billion, then lost it in 2 days. Oh, that sucks. Now that's an asymmetric bet. If you'd like to try out our service, 0 days to expiration, where we learn how to trade options on the very last day of expiration on the S&P, go to 0-dte.com/try. That's TRY. We'll see you next episode. It's actually going to be a little later this afternoon, and we'll go over the math of asymmetry. And you'll see why you actually have a positive outcome taking asymmetric, small bets, large potential outcome, over the other way of doing things. And then it'll all make sense. Have a great one. Take care.